Ever fantasized about snagging a designer jacket on clearance, only to see it become the season's hottest trend? That's the thrill of value investing, buying stocks priced below their true worth, then watching them soar as the market catches up. In 2025, with the S&P 500 trading at a lofty 22 times earnings, undervalued stocks are like hidden treasures, offering long-term growth at bargain prices. Ready to unearth some gems? Let's dive into 5 top undervalued stocks for long-term growth. Explore how to invest and pick the star of the show. Get ready for a wallet-friendly, wealth-building adventure. Why value investing is your ticket to wealth. Value stocks are like the quiet kid in class who aces every test. They're companies trading below their intrinsic value, often due to market overreactions, sector slumps, or temporary setbacks. Morningstar data shows small value stocks are 27% below fair value in 2025, compared to large growth stocks, which are 28% overvalued. Historically, value stocks have outperformed growth over decades, with the U.S. Value Index averaging 8% annual return since 1985. They offer a margin of safety, reducing downside risk while promising upside as markets recognize their worth. Whether you're eyeing retirement or a dream home, these stocks deliver steady growth without the heartburn of overhyped tech giants. Let's meet 5 undervalued champs poised for 2025 and beyond. Verizon Communications, VZ. Verizon, a telecom heavyweight, is like a reliable old pickup truck, steady, strong, and undervalued at a 6.5% dividend yield. Trading at about $40 per share with a trailing price-to-earnings ratio of 17, it's a steal compared to the S&P 500's 22. Its 5G rollout and Internet of Things focus promise 4 to 6% revenue growth through 2030, while its $26 billion free cash flow covers a $6.7 billion dividend payout. To invest, open a brokerage account with Fidelity, free 15-minute setup, buy shares, and expect $2.66 annually per share, paid quarterly. A $5,000 investment yields about $325 yearly, plus potential 10 to 15% price gains as 5G adoption grows. Verizon's oligopoly-like wireless market and stable cash flows make it a long-term winner for income and growth. Barrick Gold. Barrick Gold, a top gold producer, glitters at about $19 per share, with a forward price-to-earnings ratio of 9.8, half the S&P 500's. Gold's record-high prices in 2025, driven by inflation fears and geopolitical tensions, boost Barrick's $1.2 billion free cash flow. Its 20-year growth pipeline, including copper assets, supports 5 to 7% annual earnings growth. Buy shares via a brokerage like Vanguard, and a $4,000 investment yields about $160 annually at a 4% dividend, with 20 to 30% upside as gold stays hot. Barrick's low debt and premium assets make it a safe bet for value investors betting on commodities and economic uncertainty. Lennar Corporation, LEN. Lennar, a leading U.S. home builder, is undervalued at about $170 per share, with a buy-a forward price-to-earnings ratio of 8.5 despite a 46% operating margin. The U.S. housing shortage, 4 million homes per estimates, fuels 10 to 12% revenue growth through 2028. Lennar's clean balance sheet and $1.3 billion free cash flow support, a 1.5% dividend yield, and share buybacks. Invest through a brokerage like Schwab, and a $5,000 investment yields about $75 yearly, with 15 to 20% price upside as housing demand surges. Lennar's scale and efficiency make it a prime pick for value investors eyeing the real estate rebound. United Parcel Service, UPS. UPS, the world's largest delivery company, is a value gem at about $130 per share, with a forward price-to-earnings ratio of 9.5 and a 5% dividend yield. Despite a 2024 hit from Amazon cutting 50% of its UPS volumes, UPS's $5.4 billion free cash flow and cost-saving measures promise 3 to 5% earnings growth by 2027. Buy shares via E-Trade, and a $5,000 investment yields about $250 annually, with 10 to 15% upside as business-to-business deliveries recover. Morningstar pegs UPS's fair value at $138, signaling room to run. Its wide economic moat and global network make it a steady long-term bet. Merck & Company, MRK, Merck, a pharmaceutical leader, trades at about $115 per share, with a forward price-to-earnings ratio of 9.1 and a 2.7% dividend yield. Its cancer drug Keytruda drives 16% sales growth, while a pipeline in immunology and cardiovascular treatments fuels 8 to 10% earnings growth through 2030. A $5,000 investment via Interactive Brokers yields about $135 yearly, with 15 to 20% price upside as acquisitions kick in. Merck's 7% revenue growth in 2024 and $30 billion cash flow make it a value star, despite Keytruda's patent cliff in 2028. Its strong fundamentals and dividend history scream long-term growth. Which stock shines brightest? Verizon steals the spotlight for its juicy 6.5% yield, low price-to-earnings ratio, and 5G-driven growth, making it the best blend of income and upside. Merck follows closely, with Keytruda's dominance and a robust pipeline for steady gains. Barrick Gold excels for commodity bulls, leveraging gold's surge. Lehner's housing tailwinds appeal to real estate optimists, while UPS offers stability despite short-term hurdles. Verizon's high yield and telecom resilience make it the top pick, but diversifying across all five balances sector risks and maximizes returns. Tips for value investing success. Hunt for price-to-earnings ratios below the S&P 500's 22 and price-to-book ratios below 2 to spot bargains. Verizon's 17 and 1.8 fit the bill. Prioritize companies with economic moats, like UPS's global logistics network, for lasting value. Diversify across sectors, telecom, commodities, housing, delivery, pharma, to dodge industry slumps. Use FinViz to screen for high free cash flow and low debt, ensuring financial health. Hold for 5 to 10 years. Value stocks often take time to shine, but patience pays off. $10,000 in Merck at 9% annual growth hits $23,600 in 20 years. Check Yahoo Finance for news on earnings or sector shifts to avoid value traps. Stocks cheap for a reason. Stay calm during dips. Value investing rewards the steady hand. Value investing in 2025 is your chance to snag bargains and build wealth. Verizon's telecom strength, Barrick Gold's commodity shine, Lehner's housing boom, UPS's delivery prowess, and Merck's pharma might offer a treasure trove of growth. Open a brokerage, scoop up these undervalued stars, and hold tight for long-term gains. Subscribe for more investing gems, comment below with your favorite value stock, and share this guide to help friends join the wealth-building party. Start your value investing journey today and let your portfolio grow while you kick back.